Hello everyone, this is a daily forecast on Euro-Dollar. Today is September 6th. It's the first day of the trading week. This video is brought to you by Finteria Markets. Please check our website for more information about the company. So as usually, I'm going to start with a website service called Winners and Losers that shows you the strongest and weakest currencies of the market. I'm going to start with the 8-hour time frame because it will include the Asian session. In case if I'm watching the daily chart, then we are mixing the Friday session with Monday's Asian session. Actually, in the beginning of the trading week, I prefer to look at how the markets open because we have a new week and we have a new tendency. So I prefer to look at the tendencies from scratch. And on Monday, we just check, first of all, 8 hours and see what is the situation from the market opening. So as you can see, the US dollar is slightly recovering. It's currently the strongest currency, gaining 0.13%. The currencies that gained the most over the last week are slightly suffering. The New Zealand dollar lost 0.11%. And the Australian dollar is not actually very far. The rest of the market is pretty stable. Euro, as you can see, it's very neutral. And we can say the same about the British pound. If we check the long-term tendencies, and so we can see the situation over the last week, we had a really strong domination of the high beta currencies, the commodity currencies, the Australian dollar and the New Zealand dollar. And safe haven currencies suffered. The Swiss franc lost more than 1%. The Japanese yen was also one of the losers. And also a big loser was the US dollar after the week job report. So let's speak about this report. I have the economic calendar here. I would like just to provide a few comments. So we had the non-farm payrolls at 235,000 instead of expected. Well, the expected value was 750 and the previous value was about 1 million. So actually the number was very weak and there was a strong market reaction. The dollar fell across all currencies. So we had a really pretty good moves in the market. However, there are some positive signs about this report. First of all, the unemployment rate did actually improve. So there was no any disappointment. So we were expecting 5.2% and it was confirmed. And on another side, another positive factor for the US dollar is that the average hourly earnings, the wage inflation is increasing very strongly. So the forecast was 4% and we got a much higher inflation. So average hourly earnings is a wage inflation that is very sticky. It's not very likely that inflation, the wages are cut. So here we can see that in the situation when we do not have enough employees and there's a shortcut actually in the workforce, and in the average weekly hours are actually going higher and the average hourly earnings are going higher. This is actually a very positive sign and it shows that the inflation is pretty high. So what it actually means is that despite the weak non-farm payrolls, there were a few bright spots in the report. So probably that's why the weakness of the US dollar was constrained. So let's speak about today's week. Now I'm going to use the Forex Factory. It's just more compact, I would say. It's more like short. Well, first of all, there's nothing expected today. There's a bank holiday in the US. It's a Labor Day, so I don't expect a lot of volatility today. Within this week, we are having a few important economic releases. First of all, we have 3 central bank meetings from the Central Bank of Australia, RBI, Reserve Bank of Australia. We also have a meeting from the Bank of Canada and also ECB. I think the meeting of ECB on Thursday is going to be the most important, because we also will have economic projections, and also there's some probability that the ECB may be less dovish than the market is expecting, because there are some good signs in the economic recovery. So we can expect that ECB is going to be dovish, but probably less dovish, and this can be probably considered a bullish sign. So we'll see. We'll talk more about that before Tuesday. So for the moment, I would just mention that we don't expect any news today, and volatility specifically on the commodity currencies may rise tomorrow morning. So at 4:30 GMT. Let's switch to the charts and discuss the situation. This is the daily chart on euro-dollar. So as you can see, we approached the level 119. We were not able to break this level. So yeah, probably one of the reasons that the report was not that bad. And right now we are in between two key levels, 119 and 118.50. So in my opinion, it would make sense to consider longs from this level. We probably need to wait and see if the US dollar is really showing some signs of recovery. But I think overall, if we switch to the 4-hour chart here, we can see that those levels, we can see this upward channel. And so in case if the euro dollar returns back to this area, here we have multiple areas of support. First of all, it's the trending line, which is going from here. It's very subjective, but still I would mention this support line. Also, we have the level 118.50, which was very strong before, and it was touched multiple times. And also we have a trend line from the current impulse. So there are multiple support lines located in this area, and this can be a good area for considering long positions. So I wouldn't say that it's the best opportunity for today due to the low liquidity and low market volatility. I think the markets will not move a lot, because many traders will avoid making trades today. They know that the US Open is going to be closed, and basically they will avoid trading, and they will not expect a lot of volatility. But starting from tomorrow, maybe in case if we have deeper correction today, this area can be a potentially good area to initiate new positions, with placing the stop loss below like 1820. I think it would be a good area, and consider long positions with a target 119. So I think it wouldn't be a good idea to have positions during the ECB announcement. So, but before that, if there's going to be anticipation of less dovish stance of the ECB, we can actually expect euro-dollar to appreciate even before the conference call, before the meeting. So, and then we could liquidate the position just before the ECB announcement. So that would be my trading recommendation, to buy dips. Do not trade today, try to avoid. Buy dips in the direction of 119. So that's it for today. I hope you like this video. Please leave your comments and questions if you have any, and subscribe to the channel in order not to miss the following recommendations. Thank you for watching.